Decision Plus has been and still is a leading stock market service provider. From training to coaching, we cover it all. Try both our software as well as our coaching site, completely free for 10 days without obligation. No credit card is needed to sign up for the trial. The trial subscription will be automatically canceled for you at the end. DecisionPlus.com, your stock market service center. Real-time coaching has been created. We search and classify critical reports and technical movements. You can visualize or hear the best buying and selling opportunities. Get real-time advice all day long and 3 live coaching shows per day. Let us do the work and save your time for trading. Try MarketGurus.tv free without obligation for 10 days in the menus above. Market Vision Plus is the trading companion of so many investors. Make your fundamental and technical analysis easy with Canada's #1 stock market decision-making software. Research, decide, and follow your positions with Market Vision Plus. See the menus just above this program and try Market Vision Plus for 10 days without any obligation after the show. When it comes to day trading, Trader Plus is the right tool. Track 50 quotes simultaneously, create dozens of quick lists, display as many as 30 real-time intraday charts at the same time. Watch the action with candlesticks or bar charts as fast as 10 seconds. See the market by sectors. Use the chart models already prepared for you. Try Trader Plus for 10 days in the menu above without any obligation.
Hello everybody, welcome to the Swing Trading Show. Today we're Wednesday, August 12, 2015. The question bar is open, folks. If you have any questions, feel free to ask them. We're going to take out the board of the free trials segment, so you'll be able to have access to see the video in full screen and also ask your question concerning particular sectors, strategy that you like, that you're thinking about on a particular stock. So for today, we have a pursuit of the correction. Yesterday on the markets, though, there were some bearish momentum where we erased all of yesterday's gains. Now today it's a pursuit of the correction, and the thing that explains that is again China, that continues to worry investors, where a lot of investors are expecting a slowdown of their economy to be sluggish in terms of demand, and this is actually bringing a lot of stocks down. This is one of the reasons why today on MarketGurus.tv we decided to get rid of a stock that is really exposed to China, which is called Apple. And Apple, we had recommended that stock around this area here. We got rid of that stock because at opening the stock broke down its support, so we had to stay technical, respect our exit point on that stock. This is why we got rid of it. Now the stock is rebounding. That doesn't mean that we might not get back into Apple at another price, but right now it's all about playing defensive and getting rid of that positions because we're losing too much money. Now concerning the situation here on the Nasdaq, we see that the point where we could have a rebound, which was this 100-day moving average there at 5,020, has been broken down. Therefore, the bearish momentum on the Nasdaq could bring it towards 4,914 points. On the on the Nasdaq, I mean, it's actually the weakest index. We have the Dow Jones that pursues its decline as well. Actually, the situation in the Dow Jones is really bearish, though. So far, the fact that the Dow Jones has been really bearish, we're reaching a point where potentially a rebound could happen. We read an article saying that a lot of analysts are estimating that there's a 45% chance that the Fed might raise interest rate. Can we take out the free trial segment? So with this situation that's going to happen, though, why the Fed might not raise interest rate, according to those analysts, is because if ever they do raise interest rate, this is going to bring the US dollar back up. If it does bring the US dollar back up, well, then it's going to be negative for US companies. So a lot of companies in the Dow Jones are going, a lot of investors are expecting either for the Fed, if ever the Fed raises interest rate, because they don't take that into account, well then we might see a weakening of the earnings growth. And I think the markets already is in advance, and this is why we have seen a bigger sell-off among major caps, which have more exposure among international markets. So this is why the Dow Jones is taking one of the biggest hit compared to the SPY, where right now we're still in a neutral range, a big neutral range. I mean, on a yearly basis on the SPY. However, we see that the downward momentum could bring the SPY towards 204. There's still that 200-day moving average there, where we have rebounded several times on the last few months. So this is actually a point where, technically speaking, we might actually have a rebound, which we had today on the SPY. So really the bearish momentum is there, but in terms of the bearish ETF today, at opening we have said, okay, going amongst the bearish ETF. However, in terms of the potential of those bearish ETF, most of them have stabilized. If we take a look at the situation here on all the indices, we have here a clear stabilization phase now that is starting on the indices, the TSX as well. And taking a look at the bearish ETF that we've talked about today, we had some bearish ETFs such as TZA that today have surged, but right now is staying totally neutral. A bearish ETF like SQQQ, which surged, but right now is staying totally neutral. Those ETFs so far, we have recommended SQQQ, for instance, on marketgurus.tv, that you can have access for free for 10 days. I think around this area here. We're in a situation where right now we're slightly above the price that we recommended that ETF as a buy. However, we are not yet in a situation where we're actually going to take some profit on a stock like an ETF like SQQQ, because compared to the price we paid, the increase is still slightly minimum compared to the price we paid on SQQQ. So this is why we're not recommending that stock as we're not taking some profit on that ETF. Is it a buy today for SQQQ? Well, the thing is, the Nasdaq, we have 4,900 that represents the potential. So this is a potential that you have on the Nasdaq on the downside. So for short term, yes, SQQQ, but for swing trading bearish ETF, it's a no-go. So this is actually the situation that we have here. I want to mention too as well that a lot of stocks that are related to China, especially Alibaba, which is a stock, if you want to play the Chinese consumers, Chinese demand, that's definitely a stock that can give us a pulse of that. And Alibaba broke down yesterday, and now you see the stock is pursuing its bearish momentum. So you're definitely in a situation that if you have opened some short positions yesterday on the markets, there were some short opportunity that I've shown you, I definitely think that you're in a position to take some profit on some of them. For instance, we had some stocks that were recommended yesterday on marketgurus.tv. There's one stock in particular here, I think it was CarMax. That stock here, not yesterday, but we recommended that stock as a short around here. And now today that stock is again breaking down. It's taking again some rebound today, but still, if ever we have markets that can make a new low intraday, that stock will again be interesting for swing trading. So we're not even in a situation where we could take some profit on that stock, but we could become soon in a situation to do so if the decline continues. There's also Jean Coutu that is breaking down, but the thing with Jean Coutu is that the downward potential is limited. $20 maximum on Jean Coutu. Performance Sports, pretty nice breakdown in Performance Sport though. Now we could have a target towards 1940, which corresponds to that former resistance on Performance Sports. First Merit, another one that is clearly nicely shortable, right, for First Merit. One thing I would suggest you to do is take a look at other indicators. So what are the indicators showing us? We're confirming a lower top on that stock. Now the histogram, what does it show us so far? There's this thing that I kind of don't like, is that we're making a new low, but the histogram is still not as low, right? So this is the thing I don't like with First Merit. The thing is that if the fact that we see here on the stochastic some kind of a bullish divergence, because we're making a new low, but the stochastic isn't, there's a probability that if you're shorting that stock today, that the stock might just come to retest again its 200-day moving average and retest it again and again, go down. And at this point, that would be the best entry point. However, I still think that today that could be a great entry point on First Merit, as long as you're willing to tolerate for the stock to not go above 1909. So this is a strategy you could favor, or you could say, you know what, I'm going to be a little bit more patient. I don't like the bullish divergence in the histogram, so I'm going to be a little bit more patient, wait for the stock to come, retest 19, and short it again. Or you could say, you know what, by looking at the stochastics, I love that stock. By looking at the MACD, I see that we're over slightly in the oversold situation, but there's no buyers who are coming in because the MACD is not heading towards the overbought situation. So for those reasons, the 10-day is below the 30-day moving average. For those reasons, I'll continue to short. I feel comfortable to short a stock like First Merit. So it's really a balance between a lot of indicators. Which ones do you favor more? And always make sure that you always have a tolerance point where if ever your bet doesn't pay out, well, you get out of that position. So that's some strategy you could adopt on a stock like First Merit. Let's forget Sohu because the stock is rebounding. Sandisk as well. 1-800 Flowers, clear breakdown on that stock. Really a nice short opportunities. Look at this on a yearly basis. We're clearly reversing an important upward trend, so that's definitely an interesting point for that stock. Now, could it maintain its bearish momentum? So far, we see that in terms of target, what I would advise you to do is to put a Fibo retracement from that top to that bottom. We see that we could reach 836. That's actually a likely target from that top to that bottom. 836 could be the first target on a stock like 1-800 Flowers if you're shorting it. So that's one of the best. As I said, CarMax is part of our analyst choice on MarketGurus.tv. So far, it's a short opportunity, but wait for a clearer bearish momentum intraday wise. If you followed our advice and shorted that stock on August 6th, when we recommended it as a short on MarketGurus.tv, well, right now you're in a good position to hold on to that stock. Eaton Vance, clear breakdown as well for Eaton Vance. Now, if we take a look at some indicators here, we have a clear bearish corridor. The thing I don't like is that we could actually stop towards 36.97 at the low of this downward corridor. So that doesn't give it really much of a downward potential on a stock like Eaton Vance. Also, the fact that it's rebounding intraday wise, those are some stuff that kind of worry me on a stock like Eaton Vance as a short.
Find answers to your questions by emailing your host at btm@decisionplus.com.
5 good reasons to manage your investments with National Bank Direct Brokerage. Commission fees fixed at $9.95 anytime for all clients and starting at only $6.95 for active investors. No administrative fees if you hold at least $20,000 in your accounts. Registered accounts available in U.S. currency. Powerful tools to help you manage your portfolio. Award-winning customer service and satisfaction levels amongst the highest in the industry. To learn more, visit nbdb.ca or call us now.
Real-time coaching has been created. We search and classify critical reports and technical movements. You can visualize or hear the best buying and selling opportunities. Get real-time advice all day long and 3 live coaching shows per day. Let us do the work and save your time for trading. Try MarketGurus.tv free without obligation for 10 days in the menus above.
So I hope I give you some tips, folks, on how you can actually determine if a stock is a nice short opportunities or not. So we're seeing all those nice short that we have found for you here. SAP, which is also a nice short opportunity. But SAP, look, it's breaking down its downward, its 200-day moving average. 2 things I don't like. First of all, it's a stock that's, well, it's not an I don't know if it's an American company. Maybe yes. Yeah, I'm not sure about that. The thing I don't like with SAP, it's German. It's German. Yeah, it's German. So there's that fact that the fact that it's a German company trading on New York Stock Exchange, there might not be as much, I would say, volume or a great selling signal on a stock like that. Now SAP, it's breaking down an important former resistance, which corresponds to support. It's a first movement, I would say. We had a false signal that came out here, another one that came out here as well. So those are some things that kind of worry me on a stock like SAP. So I would maybe go in gradually on a stock like SAP. And you see, instead of putting my exit point at $73, I'll put it if ever I see the stock reversing that downward trend. I put a 30-minute, 15-minute, 250 period on that stock, and that allows me to see a clear downward trend. So if ever I see the stock throughout the day that reverses its downward trend, that would not be a breakout, a breakdown I would consider. That would not be a short opportunity I would consider. So the stock needs to stay below 71.25 to be considered as a nice short. Comerica, a nice short opportunity. There's a clear bearish momentum on the financial sector. 45 is the first target. So you don't have a 10%, but that's the target that you have. Really in the short term, that's what you have on a stock like Comerica. Callaway Golf, I do prefer that stock because we have reached the top of a downward corridor and we have some room to go before we reach the low of the downward corridor. We could easily stop towards 857 and the next stop will be at 821. Overbought MACD, so has some room to go before we reach the oversold situation. Stochastic, same situation. We have some room to go before we reach the oversold situation, which means that the seller's momentum could continue on a stock like Callaway Golf. It's only losing 1.64%, so the exit point is not too far. 922. Whenever the stock reverses its downward trend there. So not a big loss potential. Nice entry point in terms of the selling momentum because we are in the overbought situation and just leaving it. So those are some factors why that stock is one of the best breakdowns on the market. Now let's take some questions here from Bear. As I've promised you, you had some questions about the volume weighted average share price. So we found you can go to Investopedia to give you the details, the definition of what's the volume average price. Basically what it is that it's an average of all the trading that has been made on the stock. For instance, let's say that at 10 o'clock Apple was trading at $90, at 10:30 it was trading, I don't know, at 11, at 12 it was trading at $85. Well, the volume average price is going to take a look at all those trading depending on the hours with the bid and ask, try to make an average out of this. For instance, the bid and ask at 9 o'clock, at 10 o'clock, at 12 o'clock. So make the average on all those trading hours, average of all those hours throughout the day. So we could have, okay, for today, the volume weighted average price of Apple, which means on an average, Apple traded with all those variation of the prices around, let's say, $85. So if we have a VWAP for a stock during the day, which is at $85, well, traders might say, you know what, to get an advantage or to buy that stock at a low price, my entry point on Apple is going to be only and only if Apple goes below $85, and I'll get in at 84 because I know that the volume average price is around 85, so I'm still going to make some money when I'm going to make my report. So it's a way that it's something that can be gamed by traders, but that's basically what it is. So the details I suggest you to go to Investopedia, but as I said, it's a way to actually calculate the average price of a stock throughout the day, depending on the bid and ask during some trading hours. Make the average and try to actually take that as a benchmark, and traders actually determine, okay, should we buy below that or should actually we sell above that volume weighted average price. Now, Ed, is WCP a short, a buy or sell for swing trading? Well, WCP, Ed, is actually in a neutral range, so we cannot say whether it's in a short or a buy. Even if it's a buy, we see that there's a 1285 or 1330, which corresponds to some target where the stock could stop, and you see it definitely corresponds to the 50% retracement, 1285, which is the 100-day moving average. So if it's a buy, 1285, that's the target. As a short, I think that's more likely to be a short, especially with the weakness of oil. So the stock needs to go below 1185 to be considered as a short for swing trading. And if it goes below 185, 1103 or 1064 are two targets that you have on a stock like Whitecap. So as a buy, 1244, but you have a target at 1286 and the next target 1333, so it's kind of limited. On the downside, it needs to go below 1184 and 1099 and 1053 will represent the target on that short positions. But right now, it's not a short, it's purely a stock that's neutral. Now I want to finish here with the day trade of the day. It's a stock here, which is EXK on New York. Endeavour Silver, several entry points on that stock. Really, gold stocks continue to be active with what's happening in China. Investors are rushing to some safe haven sectors, and EXK gave several entry points. We also have EDR, which actually gave us also great entry points also as well for day trading. So those of you who prefer Toronto, it's EDR. If you prefer New York, it's EXK. Those have been the best day trading opportunities of the day. So overall, folks, we do have some weakness in the indices, but this weakness is stabilizing, which actually doesn't make right now bearish ETF interesting in terms of entry points. I think they will only be interesting if ever we have another wave of selling pressure that's coming out into the markets. And the Nasdaq is the laggard. The TSX also is pursuing its decline, but declining less because gold stocks are continuing to remain active, especially on the upside with what's happening in China. So this is why EXK, which is a silver stock, it has been the most active day trading stock of the day. And elsewhere, folks, for swing trading, I think it's mostly a moment where you should respect your exit point if you bought some long positions. If they break their support, close them. Apple is an example where we got rid of that stock on marketgurus.tv. And if you had some short positions where you can take some profits, do it. So far, none of our analyst choice are in a position to do that, but we definitely are monitoring them. And if our markets make a new low, we'll be in a well position to do so. So see you tomorrow at 12:30 on the Swing Trading Show on decisionplus.com.